Hey everybody, welcome back to Growth and Value, our webcast here. My name is Mike Fairborn, sitting in for JB, James Boyd, who is out, but it is good to be here with you folks. I do focus quite a bit on what I do in terms of my investing and my trading style around fundamentals, so it's always great to fill in for JB. Discussing specifically today, I wanted to look at revenue growth, the consistency of revenue growth, and how that consistency and tracking that can in many cases equate to seeing earnings down the road. Nothing's 100% perfect in the market, but strong revenue can be one of those key indicators for future potential growth. All right, now with that, I would like to welcome in all of you here today. It's great to have you here. I'm joining the chat as well by a good friend, colleague of mine, Mrs. Connie Hill. Miss Connie Hill, great to have her here today. She's always clear and concise, is Connie, with her discussions and her chats. And so great to have Connie on board, folks. Let's go ahead and dive on into some disclosures, though, just to get going. All right. Got some short disclosures to go through here, but wanted to state information here is for general information purposes only and should not be considered an individualized recommendation. Schwab does not recommend the use of technical analysis as a sole means of investment research. Now, the Paper Money software application is for educational purposes only as well. Now, there are risks associated with investing in dividend-paying stocks, and we'll look at some of those today, but mainly today we are on the growth side. Okay, investing in stocks does involve risk, including the loss of principal. Now, past performance is no guarantee of future results, and there is no guarantee that execution of a stop order will be at or near the stop price. So just getting rolling here. All right, well, let's do this. I want to jump right on in and take a look at the markets, just big picture at the markets here. A little bit of a pullback, kind of characteristic maybe of what we might expect. Yeah, sometimes pullback, sometimes some sideways action in August. September, sometimes a pullback. On average, we might see that. We don't know if we'll get that, but hey, we've had a really good run in the markets. Dude, folks, this is like almost one of the classic definitions of a V bottom, right? Very, very sharp. Sometimes following a V bottom, you can see, a continuation of a rally, but it's not unusual at all to see a little bit of sideways action. Maybe we'll see that over here. We don't know, but it will be interesting to see. And what is interesting too is to always be focusing in on that growth component if we are looking for upside gains in a lot of ways, right? Companies that are growing, that have real growth, and I'm going to talk about a couple of different variations of growth that still account for improving earnings. We're going to talk about the revenue of growth, which a lot of analysts will say that's where the real growth comes from, is when you're actually growing the business as opposed to cutting costs. Both of those, though, could increase earnings, but we're going to be focusing on the revenue or the sales side today. So I want to jump into that, but before I do so, I always like to show this cool looking chart, and I'll just pull this up right now. This is just kind of a reflection of where we're at in the markets in terms of how the S&P gauges and how they set these two indices up. You can see growth on top, you got value down below. You'll notice sometimes that when value wanes, you'll get the growth coming in. In fact, there's growth kind of coming down a little bit and value spiking. Now, you might see that in some of the sectors that are out there. I'll show you a couple right now. It's interesting as we look at this because some of those sectors, if I pull all those up in the S&P 500, there's our 6-month sector grid. You can see that over here. Notice healthcare. I talked about a little bit about this in my, in the swing trading class yesterday. You can see we're breaking out, and that's continuing that upward move right there. We also saw, some of the utilities maybe flagging a little bit over here. I'm right down here, folks, looking at utilities, but we've got all 11 sectors down here. These have been sort of some of the classic type of value components that you'll find, though, in that chart that I just pulled up. This one right over here. And sometimes you'll see this snap back and improve. Sometimes it holds up better. Notice over here, this is kind of our sell-off early in the year around tariffs. Value held up pretty well relative to, some of the growth that really did dip. But we do have maybe some macro drivers out there in some of these sectors as well that could be a driving force. Consumer staples up again today, as well as materials. Not all indices are up, not all sectors are up, but you can see infotech just kind of coming down. I'm going to zoom in. I'm not going to make you guys squint anymore. I'm over here squinting myself, so I don't need to do that. Let's just maximize the screen. Let's kind of go ahead and skip to the right. You can see communication services have been leading the way. There are the utilities right there. Real estate sector, and then you'll notice there is a big component of the S&P 500 that is tied into, because it is market weighted, right? It's a weighted index. What do we have? If you're looking at the S&P potentially coming down, I'm just going to go to our visualize our heat maps here. Look at the size of some of these guys. NVIDIA, which I think is the biggest company out there. I think it's the biggest one in the world right now. At least I was reading that. Although Apple looks like a pretty big block as well. But look at all these. Google's a giant one together. Of course, it's the same company. Got a couple of different classes in there. You got Amazon, Tesla, AVGO, Broadcom. It's not one of the Magnificent Seven, but sometimes people like to lump it into that group. And finally, Meta down here. Folks, all tech. I mean, tech or communication services, that is really weighing in on the S&P 500 today. If tech comes back, there could be a rotation. That's what I've been talking about in the class that follows this class, which is market and sectors. We talk about rotation potential. We've talked about it for about the last couple weeks, and we're starting to see some of that get hold now, and some of these sectors are starting to move. But we will look, after this class, we will look at those stocks specifically and play some example trades in the sectors that are moving. Just a heads up, that's after this class, since I'm covering for JB's class today. All right, well, that's a lot of talk on that, but let's go ahead and now move on into our discussion as it relates to, well, revenues, also known as sales. I'm going to do this real quick. I'm just going to go to schwab.com, right? Some great tools and resources on schwab.com, really. I mean, there's some good material on here. As you can see, what I did is I just went right into the main page. Under research, I typed in Apple into the search, and I pulled up Apple here just as our example here to look at. Now, of course, other great information over here. I don't want you to ever miss ratings and reports, company profile, great details here. But today, we're going to be focusing in on the financial statements, because I did want to give you guys a breakdown on some of the statements, specifically the income statement. That is where the growth of the company can really come in and really shine right there, right? I mean, we're getting a sense of what's happening in terms of growth. I have it highlighted right here. We can also, right off the schwab.com site, and after we've typed in that symbol, you can click down here under show more as well. And what that's going to do is going to break that down into greater detail here for you. You got to go back to the income statement, and then it gives you the option to select quarterly versus annual. Just a heads up, though, on this, it does read a little bit different. You're reading from left to right, kind of like that ancient Hebrew or ancient Hebraic or Arabic languages. It's sort of right to left. We read left to right. In fact, a lot of charts are that way. But notice when you do this, the quarterly trend, just so you know, it's most recent to oldest. And so this is a reflection of the data that you're seeing over here. That can really throw a person off big time as well. So you can see over here, yeah, it was great. It looks like it's improving this non-operational expense, which is, by the way, an expense. That's good to see those expenses dipping. Notice into the present, it's actually dipping down here as you follow along with the actual numbers. It is trending down. A key note just to keep an eye on. All right. So we've got that in place right there. But the main reason I wanted to highlight this for you is, what did they refer to? You guys have heard this before. I heard it a lot when I was in accounting classes. And that is the bottom line. What is the bottom line? What is the bottom line? The bottom line is, folks, it is earnings. And when we're dealing with publicly traded companies, there it is right there. It's not just earnings, it's earnings per share. That's a diluted EPS right there, but that's exactly what it is. We're on a per share basis because it is a publicly traded company. I mean, we're looking at publicly traded companies here. Your private companies would just be earnings at the bottom. Some of those do have shares as well, but that is the bottom line. You'll see it right there. Now, as we look at the bottom line, how on earth did we get there? Let me just zoom back up again and highlight a couple of areas. The left-hand column, what are you saying? What's the very top line there? You've heard of this term before. What is the top line growth of the company? Top line growth. What are they referring to when they say, when an analyst says, what's the top line growth? Top line growth is what did they bring in terms of revenue, aka sales figures right there, okay? What do those quarterly numbers look like? Again, from right to left, how are we doing? We're doing okay. I would say that there was a spike over here first part of the year. Now, that might be a seasonal spike. We're looking at a quarterly number here. But you can see over here, I'm going to just flip this to an annual, maybe a better reflection of longer term growth. And look at that. We just track this annual bar line, and it's actually going up. So some quarters are maybe more seasonal to growth. The quarter we were looking at is kind of towards the end of the year. We know we get a lot of, there are a lot of gifts that are exchanged, etc. And yeah, so you have that for sure driving, a company like this. But I'm just saying, if you look at the annual, you can see that big picture. That's revenue. You want to know what's between revenue and earnings, folks? We'll just use our little arrow there and just slide down a whole lot of expenses. So you bring in money, and then a lot of what else is there is an expense. So I'll just make this real easy as opposed to spelling this all out. That's our revenues. We're going to subtract out, my gosh, a lot of expenses. There are taxes that are tied into that. There are business expenses. There are also taxes too. We'll just say minus expenses though, and that's what's going to give us that EPS. Our earnings per share. So there are a couple of ways to get that earnings per share higher. As you look at this right here, we can have revenue increasing, and we could be keeping our expenses relatively flat. Maybe they climb up just a little bit, but not as high as revenue. That's going to increase our earnings per share, right? We're more falling to the bottom line. Revenues could actually dip in some rare situations expenses could dip as revenues increase in some rare circumstances. That's possible as well, right? So you have that. There's another way though, too, to raise those earnings. And this is not the one we're going to be talking about today, but just as a quick note, and a lot of companies have done this years ago. So we've got our revenue, we minus our expenses, and we do have EPS down below. One way to also get that higher is just to simply cut those expenses. If somebody really cuts expenses quite a bit, but the revenue is going flat, well, you can still have higher earnings per share. The question you need to ask yourself is, though, do you like that? How long can you continue to cut expenses quarter after quarter after quarter into the future and still increase those earnings per share? At some point, you're going to start cutting into, employees that are creating revenue that you need for revenue. So it's sort of somewhat limited, right? What we're talking about today is what a number of analysts will look for right here, is that increasing revenue. They want to see the revenue going higher. Now, we're going to be mapping this out because we want to do a scan on this, and you're going to be very surprised how well you might be surprised how well this ties in to some of the most technically strong trades out there in the market. Those that are really showing a lot of strength out there sometimes are they're very highly correlated in many cases to revenue growth. And so let's just do this right now. We're going to talk about this because a lot of analysts will look for revenue growth, okay, to be really in a category of 15% plus. They like it to be 15 or higher for revenue growth because they're trying to define actual growth of companies here as opposed to just cutting expenses. And that's going to be over a 3 to 5 year time frame. We actually do have that figure on Schwab.com, which is a great little scanning resource. We're going to break it down even further here, but I wanted to highlight that here for you. So that's going to be kind of our first little screen in here. So let's go back into Schwab.com, and what I'm going to do is highlight up top here. Let's do this. We're going to go right into, I'm just going to do a secondary tab over here. Let's see, Research Tools. I just held the control button down and clicked on Research Tools. You can do the same thing with a Mac. Just hold down the Command key. We're going to go into our screener right here. I did want to do an initial search just in companies in the S&P 500. So it's really quite nice. We can just select an index, companies that have made it on an index. So that's our first selection there. Currently, the S&P 503. 503 companies in there. Let's scroll on down next into company performance. And this is where we're going to be really looking at that. Last 3 years, we'll use the 3-year, which I mentioned is pretty commonly used. Enter those values. We're just going to throw in the 15% or greater. Now, I know some of you guys out there are saying, hey, I want more than 15. Well, this figure here would give that to you. But if you think about what we're getting here, we're thinking about real. Why would they use a 3-year? It's consistent growth over a period of time. It's not just a flash earnings here and there. It's every year, year 1, 2, and 3 years back in time, we're getting that revenue growth at an average rate of 15+%. You're going to see it higher on many of these. But for the S&P 500, we're really just seeking that growth. So they've had what? This is referred to as consistency in the market. And look what that does alone. Look at that. 500 down to 91. We've knocked off more than 400 companies. What are we down to? I mean, that's like, 20%, less than 20% of the companies have just met that criteria, but we're not done yet. We want to also look at quarter over quarter growth. And what some of these analysts will do, if you really dive into the details and read about it, sometimes you can pick up on some interesting ideas. Now, within each one of these years, they have quarters and what they're looking for on a quarter basis. Now, what they're doing is they're making it comparable. This little line item right here is MRQ, most recent quarter. How did the most recent quarter revenues compare? Because we are in revenue growth right now. There are earnings below there, but revenues at the top. Most recent quarter, how did that compare to the quarter, that same exact quarter, year over year is another way they state that, year over year. And what this is doing is they're just saying, okay, I don't care what quarter it is. Remember we saw that quarter in Apple really spike high with higher revenues? We're going to compare that quarter to the most recent quarter. So we just pick a year. It was 2 years ago. Let's say it was Q2 in the second year. Well, how did that do versus just this last year? So let's just say this grew at, 4%, 4.2% or something. That's what the quarterly numbers were. But how did we compare over here, relatively speaking, on this end? Were we also growing revenues over here? And what rate were we able to grow above that 4.2%? What analysts will do, many of these guys and gals, they'll look at 3+%. That's what their focus is on a quarter to quarter. We looked at year over year up top here, 15. Our focus now is breaking it down into the minute. And why is that? We want to see some consistency as well. So let's add that in. So this is very much in line with a lot of what these fundamentalists will do. I'm going to just click the same thing here, specific values, greater than or equal to 3%. At least get us that. Now it can be higher, but we're willing to do that. That knocked off a nice percentage as well on the most recent quarter. Next up, what we're going to do is we want to see an estimate into the future as well. Are they expected to continue to grow? Now, companies in the S&P 500, a lot of times they'll have analysts that are pretty clued in, and they might have executives that are clued in, and they announce a lot. Hey, this is continuing to grow. It grew over the last earnings quarter. And so sometimes they can, I would say maybe some traders would say that, hey, they do better than, let's say, a penny stock. Some of these executives at the S&P 500 have been around for a long time to get there, and maybe they can make some better estimates. But in fact, we are using estimates. It's not a guarantee, but they have done it in the past. They've done it in the past, and they did it over the most recent quarter in terms of reaching our minimums. So could they also be estimating correctly into the future? That is the question, but we're going to include it here to take a look at, because we don't want to see, a lot of times, if the executives are guiding lower, of course, that would be a real red flag and it wouldn't show up on this list. But what we're going to do right now, are going to use an estimated number, and that's going to be a revenue growth most recent quarter over the next quarter. And I got one more. And what are we going to put on here? We want to hold the same 3% across the board. So let's just do that. Put it in real quick and you guys will be done. But this is it. This is it for the search, by the way. It was kind of a lot going into it, but once you have it, you pretty much have it. I think it might be reflective of what a lot of these, organizations might be looking for in terms of just straight growth. Of course, that can vary. And where are we at? 503 down to 19. We don't have a lot of companies that meet this criteria, especially on a percentage basis in the S&P 500, right? Very, very small number there. Let's take a look at those companies right now. But before I do so, let's just make sure we got everything answered. I think Connie's with us. Got everything caught up, I'm sorry. And yep, we're all set. Awesome. Okay. All we got to do now is just run this. We don't have this capability, by the way, on the Thinkorswim platform. If you look at the Thinkorswim platform, you do have some capacity for some of this, but not a ton. And what it's going to look like is a lot like this. Let's just go full screen here. If we go over, here it is. So here we're in fundamentals. Here's the scanner. And I've added in a fundamental search criteria. But notice under revenue here, under our fundamental criteria, revenue, folks, gives us, we've got a current, we've got a 3-year average and a 5-year. We can do the big picture one. We just can't do the quarter-to-quarter stuff, which is interesting because you want to see how they're doing or how they're expected to do going forward now. Okay. All right. That's that. Now, let me come over here. And before I actually go through those figures, just a quick note on this. I just did a ThinkScript for companies that beat their earnings expectations. That's one thing you can do actually on the Thinkorswim platform, which you can't do on Schwab. So you can find companies that beat their earnings expectations, and over the last 1 week, 2 weeks, or month. I would only share this with you guys because I don't tend to get a lot of viewers actually when I do this in my ThinkScript class when we're doing code. But I wanted to pass this on to you guys. If you find it, I mean, if it might be helpful for you, you can really use it on any script, any ThinkScript out there. But this was using ThinkScript plus alerts to get earnings beat notifications. If you would like something like this to be emailed directly, let's say directly to your, to your email, or it could be texted to you. We actually have that ability on Thinkorswim by combining ThinkScript with alerts, and it's actually quite fast. I'll go ahead and I'm going to share this playlist if you're interested in this. Here is the playlist, but specifically, I'll share this group too. It's very I would say underappreciated for what it can do. Earnings a lot of times can change the dynamic. Oh, I didn't mean to click on it, but there it is anyways. It can change the dynamic of the trend. If you get good, a good positive earnings number, that can change the trend of a stock. Not in every case, but if they guide higher, that's one way to figure out how the company's fundamentally doing. Here is the class. It was one on the top anyways, but here is earnings, or I'll just say EPS notifications for short class. And within that, you're going to get a script that you can download and use. Now, those scripts, just as a quick note, they're not guaranteed for timeliness or accuracy, but as long as the data that's coming to the platform is good, then it should be, it's going to work. It mathematically has shown it works. So, and I think we have good data coming to the platform, but I did want to state that it's not guaranteed for timeliness or accuracy. Okay. So I'll just put that in real quick. Not guaranteed. See, but it could be, I mean, as long as the data is coming in, it should function, but as programmed. But there you have it. And that way you can spot these earnings alerts when they do come through on my calendar. You know, a lot of these that do have, I'm sorry, when they beat their estimated numbers, their estimates, you can be notified of that on a day-to-day basis via text message, which is kind of nice. And you can just see and track it. Could be helpful if you're looking for a specific sector. Anyways, let's get back. We've got to hit this button and get going. So let's view our matches right now and we'll take a peek at it. Okay, now I was mentioning this before. I said sometimes you might find companies that are doing really well on the revenue side. You might find some of the strongest technical trends out there because it is, in fact, at the end of the day, it's doing what? It's focused in on growth. It's focused on the growth of the company. If the company can retain those earnings, and you might hear some of the famous sort of investors talk about retained earnings. You know, if they can get that revenue and retain it, what does that do to the value of the company over time? Well, it can lift the prices, or all else equal, it can lift the value of the stock over time. Not a direct correlation, but that's what a lot of investors will look at potentially happening, right? If the company's more valuable, sometimes share prices reflect that. Look at these companies though: AMD, Broadcom, AXON. I want to look at a few of these right now with you and see if we can spot any opportunities. And by the way, if you ever wanted to run this, let's just do this for fun. I want to go back to the S&P as well. Once you have this, it's so cool. You can adjust this very, very quickly. And by the way, you can save the screen as well if you want. You can do that once you plug those in. So that's really, really easy to do. I'm going to go back over here and just go right into my basic. I'm going to go back into the index, and I could, well, I should actually run through it. Let's spend the time on the stocks, but you could easily put in the NASDAQ, right? And see what's in the NASDAQ. There's going to be a little bit more growth in there, but it is fun to see what's moving in the S&P. And you'll notice there's some overlap here. Deckers in the Russell 2000. So is SMCI. But folks, there is some growth in here over the last 3 years. Notice everything above 15%. What about these quarterly numbers? Do you think they're above 3%? Yes, they are. And some of them are coming right at 3, but that was just our minimum. And look over here, the estimates. Some of them are in the single digits, but they're all above the 3. So that consistency of growth could be there, and that could have, as long as there's, those estimates remain and go forward, maybe that can keep the strength of the stock trend going up as well. Let's look at these right now, and then I'm going to give you a caveat to be mindful of too. I did import those, and you can import them right over here. Look over here, right there. You can click on export to CSV, and if you click on that, just right off to Schwab.com, you can import it into the Thinkorswim platform. I think many of you already know how to do this. It's actually a really cool tool. But you can just go right in and like go into watch list. Once you've copied it, go watch list. I'm going to just click on this section. By the way, right up to the right of watch list, I can go down to create watch list. I can name it. And then when I name it, I would just import it because I just copied it. Now, I've already done that for us. And in fact, I did it right here. I just said S&P revenue growth. These are those companies. I've linked it to my charts to make this quick. There's AMD. Okay. Now, somebody that was looking at an AMD already, or I'm sorry, I should say, looking at the fundamentals, and in the back of their mind, they're saying this, by the definition of a number of analysts and how traders and some traders and investors would look at it, it has growth over a period of time. And here I am looking at it on the chart. It breaks the trend line. It makes a what? A new high. Do earnings come through? Earnings come through. Maybe the revenue is starting to hit some of the earnings over here. We have a higher low, and we start to break highs again. Now with this, and what I talk about in my swing trade class a lot, are these 3 to 14 day moves. 3 to 14 days. That's a 1-4. 3 to 14 days, folks. 3 to 14 days off of these little minute flag patterns right there. See that? What's going on behind the scenes? The growth. Now, the caveat is if they miss their earnings, sometimes they're priced really high, but they've had that consistency. And so some traders might do this. They might try to trade in between earnings announcements. As long as they don't have an early pre-announcement, they might not want to hold over earnings. They might wait. There's plenty of opportunity to trade this between earnings, right? I mean, this is all in hindsight, but you guys get my point. AVGO, Broadcom, strengthened through there. AXON, look at that. It's coming through. Are the earnings kicking in gear? Perhaps. Look at this. That was an interesting flag pattern there that actually gapped higher. Now, we did pull back because the markets have pulled back, but sometimes traders will look at this for maybe the start of the trend coming up because they've got the fundamentals. They believe they have they think that those fundamentals might continue and the growth would continue that we have looked at here, the historical growth and projected growth. They're expecting that. As BRO, that guy dropped, but it looks like it has a long upward trend. Here's another one. See the flags right there? Flag, flag again. There are some flags in here. There's no doubt about it. Oh, gosh. Get that off. And what do I have? There we go. Okay. You click one thing, and there it goes. Okay. CRWD coming into earnings at kind of a long pullback. Will it start? If it does have good earnings, maybe there's a consistent run that it's had in the past. You guys get my point here as I go through this, right? Look what else we have in here. You've got NVIDIA, you got Palantir. Believe me, they have been there for a while. And some of them did go down and kind of bottom before they ended up going up a little bit higher. What's this day? So think about that revenue growth. Don't know what happened here on Dayforce, but Dayforce confirms buyout talks. It's not too surprising if you have a lot of revenue growth and the prices aren't doing a lot, sometimes they get bought out because the market, people are saying it's worth more, the underlying business is worth more, and boom, there's the buyout. By the way, was smart money looking at this one? There's my money flow indicator. Takes a lot to move money flow. It really does. A lot of times it's an institutional move. It's referred to as a smart money indicator. See it going up as prices are going down? That's also known as accumulation. There's the buyout. If shares don't perform, maybe somebody outside the market looks at this and says, well, I think this might be an interesting deal. I've seen Pod. Okay, now Pod breaking, on the verge of breaking higher. Do you see what I'm saying? A search like this can help you find, we just looked at fundamentals, but we're finding very interesting, maybe according to some traders, potential trade setups here that they might be utilizing going forward. There's Uber. A lot of flag patterns in there, right? There's W-Day. Let's see, Workday. Workday, okay. So how do they respond on earnings? Maybe a fun one to keep an eye on. Look over here. My goodness. Money flow. People haven't gone away. It's being accumulated according to money flow. This is accumulation as shares are going down. Why would they want to be accumulating this? Do they believe maybe that it's growing behind the scenes? That's what could, I mean, to move that money flow line, a lot of times it does take some big buying and accumulation over periods of time. So just park that in the back of your minds, folks. I hope you found this informative and useful. I've got to get out a little bit early today because I've got to teach the next class. But the next class, markets and sectors, we're going to take a look at specifically that rotation that I'd mentioned earlier. In some of the sectors, we'll look at some of the stocks. We'll place some paper trades on there as well. Now, folks, if any of you are interested in some of the classes that we do teach as it relates, because a lot of these companies are actually tied into, like I mentioned, the fundamentals. Sometimes you got the fundamentals that will connect pretty well into swing trading. You can look at the swing trades as well. I'm just going to highlight this. If that's of interest to you as well, you can take a look at that. But here is the playlist that we utilize right there. And that's a swing trading right here. This is the most recent one we did where we just look at breakout potential. On a lot of these, I do tie in actually some of the fundamentals as well. We talk about fundamentals, not a ton, but it's there. Be sure and check out Connie's stuff. She's got some great classes as well. But here is that swing trading. If you're interested, it does tie in actually to this component of fundamentals, and that is really some of that growth. All right, folks, if you're getting value from this presentation, smash that like button. It lets me know that you found this informative, useful. Appreciate JB for letting me step in today and discuss, this just a different aspect of growth, really growth through revenue as opposed to growth through cutting of expenses, namely. A couple ways to grow those earnings. There's more than that, but some of the two big ones. On that, thanks so much, Connie, for your help. Great to have you all here, and I'll see you in about 25 minutes or so. Take care, all.